Hey there, welcome back to the channel. So today I wanted to go over some of the carnage that we saw in the small caps. So overall on the SPY, you can see that today we just had up 0.5%. Really not much happened on that. If we look at the Qs here, let's just do it this way. We see that the Qs were down a little bit, 0.35%. If we go look in a little more detail. So basically, on the NASDAQ, you had this outside bar today, kind of picked up at the end, pulled up the wick. So that's good, but definitely some pressure in some of that stuff. Same thing with SPY, we did gap up a little bit and then came down, but then recovered. Dow Jones Industrial Average. What did this one do? This one's performing the best. Interesting. So really, but what's really going on? Let's look at the small caps. Now, as the indice overall in the Russell seemed to be okay, just down a little bit. Now, it's kind of interesting if you kind of look at this guy and you kind of see, you have this W here and you have this, point where it's like trying to break out, but it's so far failing to break out above there on the IWN on the Russell. So that's kind of like not sure what's up with that. But what we want to get to today, let's look at some of these guys. So here's like a firm. This is one that got whacked 10% today. It's been in a downtrend for a while, gets whacked today, not really big surprise. It tries to pick up, but look, there's no buying there. There's no buying. You need a base. Even you can't, there's just no buying there, dude. Come on. Now let's look at the weekly. Even on the weekly, it looks like dog poo on a stick. And that's dog poo on a stick. Come on. There's nowhere. Yeah, it's coming into here, into a support area, possibly. But you got to put a base in. You got to have some kind of base before you buy. Carvana, another crappy one, 7.8% down, pulled up half, but still, it's still very little to go by here. Now, the only good thing about this one is it had gotten beaten up more. And so today it actually didn't put in a new low. So, hey, maybe that's got some positive stuff going on. Big picture, though, this is better than that other chart, but just note that you are under, the 200-day and the 50, and you have right over here, what do you have? Death cross right there. Okay. So that's kind of what you got there in that guy. DocuSign. This one didn't do much today, down a little bit. Weekly, it had gotten beaten up in the past. So, I mean, basically, it's got the crap kicked out of it, a month or two ago. So, it's sort of dead meat right now. End phase, this guy, daily chart, look at this thing. Another down 3%. So it wasn't as bad, but look, it's been in a downtrend for the last 2 months. It's getting the crap kicked out of it. On the weekly, what is the prospect? Well, hey, at least it looks to be above the 200-day moving average. So that's maybe more positive there. Robinhood, look, the thing's been just down since the IPO, so I don't know. I mean, maybe there's a little base starting to form. Probably not. Lemonade daily, so one with a 7% downtrend on the daily chart. Weekly, also a downtrend. This thing, look, this one as well here, this period here, you would hope to find some support, right? But no, you're below that now. So we've been below that for several weeks now. So that's another one that's it's turning into dog poo. So let's see, Matterport. Look, dog poo, just dog poo. And it's just getting the crap kicked out of it. Let's see on the weekly chart. I mean, at least on the weekly, like, look, hey, we're above where we are in the IPO. We had kind of this W base. Okay, that's not super bad. Net flare, another 8% down today, kind of picked up at the end, but look, heavy volume, downtrend for several weeks. So this is the kind of thing that you see, like, these didn't come out of anywhere. These did not come out anywhere. These things are having these problems. A lot of these at like the 200-day moving average. They already blew through the 50 and they've been a downtrend for 2 months and people are still in them, I guess. I don't know. Now, and if you're really long-term and 200-day average, I guess it regained it. Maybe this is the place to buy. Maybe, I don't know. I wouldn't buy it there. Neo, kind of a down day, had a good day a couple days ago, but let's see on a weekly what it's looking like. This one, hey, maybe a little better, but you have this big thing. You're below the 200-day moving average or the 50 week moving average here. So, you're kind of in that area where, once again, what kind of cross did we have? Death cross right there. So it's another one that, look, when this stuff happens like this and you have this, like, I don't know. I don't know why people hold on to it. You got to have a base, you got to have some kind of a base has got to form, if this thing formed a nice base, something like that, you would see the moving averages flatten out. And then let's see if it starts working its way out. That would be really, really good. That would be good. So, but that's not happening at this point. Pinterest, 9%, geez, just getting the crap kicked. And once again, this one here, Death Cross, it had 6 months ago, and it's still going down, so and then here's the Qs down just a little bit. So the averages are holding up better. Roblox, this thing down 3%, not as bad. It's kind of a newer trading thing, so who knows. And then Shift. Now, Shift, I did this one in a different, I had a different video on this, and I wanted to show this chart. So it got beat up and it had gone, I'm going to try to just zoom in here a little bit and we'll see what that's going to be about. Okay. Yeah. So like over here, and we had this W, right? And I was talking, I did the video about how I slept in and I missed the buy. Well, it turns out I'm very lucky it did miss the buy because it didn't, it kind of gave up all the gains today. That's the whole thing. Let me just zoom in real heavy. This is called railroad tracks. So basically what we have, I'm using a different chart instead of a, whatever you call it, candlestick chart. So here on the left knob is the entry, opening price. The range is the wick, and then the right knob is the exit. So this is like, makes a little railroad track right here. This is kind of cool. But it's an interesting pattern. You can kind of look it up, but it's sort of like, look, it had a nice strong day, and then it gave up the entire day. The following day. So it kind of just reversed the entire move. So it's very, that's kind of interesting. So like, in a way, I guess I'm very lucky that it, because it did fall apart. So I'm kind of glad I didn't get that thing. So now we go to Shopify, another one, big down day, big volume too, 10% down. Let's see on the weekly, this was important. This is important this week. This thing is breaking through the 200-day moving average. This is really setting up for bad stuff. Snowflake, 5% down day, tried to pick up, and this is also like a little bit of a, what they call this guy, a little bit of a descending triangle possibly. It's sort of like, you draw your lines a little different, but it's sort of like a descending triangle. So it's kind of bearish, it's kind of holding. They're trying to hold it, but who knows? Now, the weekly, this one's maybe a little bit better. You have this basically flag over here, and it's not at all-time lows. So maybe this one can put in a base, put in something, give us a point to go. Spotify, this guy, down only 2%. It was down a lot more, and it actually came back a lot. So that was a positive there. And then this one here, see this one here, it's almost like you look at had to move here. And then over here, you can see how it's trying to put in a base. It's kind of putting in a base, but it's so far, it's kind of failed to hold. Like here, it broke out of the base. Right here, it broke out of it. It broke out, but it failed and then came down. So that's why today, I think it probably didn't move that much because it's just, it had already failed. And this is like the IWM had already failed together. And then we go back to here. And if we just go to the IWM on the weekly, we can see like what had happened with the IWM earlier this month. So you see that in just a couple of these charts, you see they had this run where they failed. And that's kind of what happened. So I think that, the real big picture is the overall averages, there wasn't much of a move, but depending on where you were positioned and what you're doing, you really could have gotten the crap kicked out of you. And I think, like I just will pick lemonade as an example of something to just not be in. I don't know why someone would be in this. I mean, I get the fundamentals, but you're sitting here in this, really just, confirmed downtrend. You've got everything turning down. You got the 50, the 200, everything's turning down. So I don't know why people would want to be in there. And then the problem that you have is you're trying to do what? What's happening when you're saying, oh, it's a down day and I'm going to buy. Oh, it's a down day and I'm going to buy. Well, what are you doing? Oh, down day. Oh, I'm going to buy. Down day, going to buy. What are you doing? What really are you doing? You're trying to pick a bottom. And, if you're going to pick a bottom, one of the most reasonable place to pick a bottom would be right here, but you're already through that. So the question is, okay, well, what do you do now? So if you're in love with this stock and you really want to, get in again, well, what do you do? Well, what do you need? Well, you need a base, you need some kind of a base, and it can look like a W, it can look like a range, it can look like whatever. And then you have to make a run at going at that base. And then, so the way it works, so that, you reduce your risk, because basically what you're going to do is you're going to say, I'm going to buy there. And then what I'm going to do is I'm going to like cover myself if it goes lower. So basically, if I'm looking here, it's in this range. And so I'm going to draw it here in this range. It goes out. I'm going to try to buy at this range here, and hopefully it keeps going. If it doesn't and it fails to break out and goes down this way, I can get out. And then I have a defined risk. That's what you're doing. You have a defined risk, right? When you're sitting here and you're just, trying to buy here, 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 you have no defined risk. I mean, when are you ever going to give up on this thing? And it's really important to understand that a lot of times these companies may have high growth and they may be really good, but you got to start asking yourself questions like, hey, what does the market know that I don't know? Is the market really that dumb? Maybe. Is the market really that wrong? Yeah. But you really should look into it, because if they're having problems like meeting the expectation, and it's all expectation, like these could be really solid companies that could be around for 100 years. But if your expectations of the market is this crazy, if they were back here pumping it up, I mean, it can be crazy. So, I mean, I would just urge caution on that stuff. I mean, I think in terms of philosophy, like if you're going to be trading stocks and investing in stocks, you got to kind of pay attention, I think, to both. You really have to pay attention to both things, which is the technical analysis, which says, look, you need to not be in this thing. And the thing is, if you were like, for example, you had gotten into IPO, okay, great. Now look at, even if you were at the IPO and somehow you got at the bottom IPO instead of the top of the IPO, which you probably didn't get, now you're losing money from that point, or or if you somehow got it here, you're like going to lose money. So, the technicals, you got to play that. So ideally, what would be a better strategy than just looking at fundamentals would be to look at technicals in companies with solid fundamentals and solid growth products, high growth companies. And of course, it's very challenging because these things get ramped up. But here's a great example. You broke a W. This thing ran all the way from approximately 70 all the way into the 140s. That's a double. That's a two-bagger in 5 months. Why in the hell would you just ride the whole thing down? I mean, I can see an argument where you want to like try to hold it really good. And so you hold it into this range somewhere, but at some point you got to say, hey, enough is enough, So I think that's it for this one. Bloody action in some of the small caps. So watch out for that. Talk to you later. Bye.